You've just closed a big deal. The contract's signed, the champagne's on ice, but there's one small detail that's bugging you. How exactly do you record this success in Xero? Don't worry, you're not alone. Many small business owners grapple with accurately entering transactions into their accounting software. In this video, we'll break down the process of creating an entry in Xero step by step. We'll cover everything from understanding the basics to tackling more complex scenarios. So, grab your coffee, settle in, and let's get started. Understanding the basics. What is an entry in Xero? At its core, an entry in Xero represents a single financial transaction. This could be anything from a sale to a purchase, an expense to an invoice, or even a bank deposit. Xero uses a double-entry accounting system, meaning every transaction has two sides, a debit and a credit. Think of it like a balancing scale. For every debit, there must be an equal and opposite credit to keep the equation balanced. Key accounts to know. Before we dive into creating entries, let's familiarize ourselves with some essential Xero accounts. Income accounts. These track revenue from sales, services, and other income sources. Expense accounts. These record the cost of doing business, such as rent, utilities, salaries, and advertising. Asset accounts. These represent valuable resources your business owns, such as cash, inventory, equipment, and property. Liability accounts. These are obligations your business owes to others, such as loans, credit card debt, and accounts payable. Equity accounts. This represents the owner's investment in the business and the accumulated profits. The importance of accurate entries. Why are accurate entries so crucial? Reliable financial reports. Accurate entries are the foundation of your financial statements, such as the income statement, balance sheet, and cash flow statement. These reports provide valuable insights into your business's financial health. Tax compliance. Accurate records are essential for tax preparation and ensure you're paying the correct amount of tax. Improved decision-making. Accurate financial data empowers you to make informed decisions about your business, such as pricing, spending, and investment. Reduced risk of errors. By entering transactions correctly, you minimize the risk of errors, which can lead to costly mistakes and audits. Creating a simple entry. The invoice. Step-by-step guide. Let's start with a simple example. Creating an entry for an invoice. Navigate to the Accounts Receivable tab. Click Add Invoice. Enter the customer's details. Add the invoice date and due date. Itemize the products or services sold, including quantity, price, and tax. Review the invoice and click Save. Xero automatically creates the journal entries associated with this invoice, debiting accounts receivable and crediting the relevant income account, creating a more complex entry. Bank reconciliation. Understanding bank reconciliation. Bank reconciliation is the process of comparing your bank statement to your internal accounting records. This helps identify any discrepancies, such as unrecorded transactions or timing differences. In Xero, you can easily reconcile your bank accounts by importing your bank statements or manually entering transactions. Step-by-step guide. 1. Navigate to the Bank Accounts tab. 2. Select the bank account you want to reconcile. 3. Click Reconcile. 4. Import or manually enter bank transactions. 5. Match bank transactions with corresponding entries in Xero. 6. Record any unrecorded transactions, such as bank fees or interest income. 7. Review the reconciliation and click Finish. Tips for efficient entry creation. Use templates. Create templates for frequently occurring transactions, such as recurring invoices or regular expenses. This saves time and reduces the risk of errors. Track your time. Use Xero's time tracking feature to record the time spent on projects. This helps you accurately track billable hours and allocate costs. Utilize Xero's integrations. Integrate Xero with other business tools, such as e-commerce platforms, point-of-sale systems, and payment gateways. This streamlines data entry and reduces manual work. Regularly review and reconcile. Regularly review your entries and reconcile your bank accounts to ensure accuracy and identify any potential issues. Troubleshooting common entry errors. Account not found. Double-check the account name and ensure it exists in your chart of accounts. Debit/credit imbalance. Carefully review all entries to ensure the debits and credits are equal.